Hello, I'm Mark and welcome to Little Known Stocks, the show where I try to prove that being boring and doing your research will make you money. Now, today I'm going to be talking about Tattooed Chef, which if you're a retail investor is probably a company that you've heard of. They're a little bigger than the stocks that I usually cover, but I wanted to cover them for four reasons. Firstly, I work in the FMG sector for a big food company, so I know this industry well. Secondly, I am vegan, so this is very much something that I understand. Thirdly, this is my largest position, and so I need to research this stock, and I thought I'd share the research that I'm doing. And fourthly, I think there's a lot of information out there that hasn't been mentioned. Certainly people aren't mentioning a bear case very much for this company, so I wanted to share some new information and get some new information out there for people who are looking to invest. So who are Tattooed Chef? Well, they are essentially a food manufacturer, and one of the great things about the company is it doesn't get much more complicated than that. They have a range of 32 products currently, all in the frozen aisle, but they are looking to expand outside of that, and really they're focused on plant-based, so vegan, vegetarian and gluten-free type produce. So they're a food company, so what is so excited about that? Well, the thing that's got everyone so excited is their explosive growth rate. Their 5-year annual compound growth rate is 63%, which is huge. If you think about some of the larger companies in this space, they might be growing 1, 2, 3% a year. So this is really, really strong. And it doesn't have any sign of slowing down. It seems like they're going to continue to grow. The space that they're in, the more healthy, vegan, plant-based side of things is really growing as well. So they're in a sector for growth, and they are growing and really leading the way within that sector. So if we look at them, today they've got a market cap of 1.5 billion roughly. They have been up and down quite considerably. From their highs of 28, they're down quite significantly, but they are a very young company in terms of being listed. They merged in late 2020 with Forum Merger Special Acquisition Company. And really being a SPAC is one of the reasons why they've taken a bit of a tumble recently. A lot of the SPACs have been hit regardless of the underlying quality of the company, which for us as investors is a really good thing. Now, as well as being a SPAC, there are a couple of reasons why Tattooed Chef has been driven lower over the past couple of months. It's important that we look at them, we understand them, and we make sure that we're aware of the risk and what impact it may have on the long-term potential of the company. Now, the first item that made the stock drop was the insider selling. So Salvatore Galletti on the 15th of April sold a significant amount of shares. He's the CEO, so it's always worrying when the CEO starts to sell shares. But if you look at the footnotes on the filing, you can see the big bulk of the shares represents transfer of shares by Mr. Galletti in satisfaction of personal indebtedness owed by Mr. Galletti. And the company have actually since released a statement saying that this was pre-arranged. So we don't know when it was arranged, but certainly $10 a share if you were looking when they originally completed the SPAC. That's a good price to sell your shares at. Now, the second bunch, the 500,000 shares, this is a bona fide gift made by Salvatore Galletti. So, it's a gift. And really, if we're looking at his situation, he's still owning 38% of the total company, which is huge. So he's by far the biggest individual insider, and his position is only reduced by 4.01%. So not massively concerning. It just sounds like maybe he's getting some of his finances sorted and getting some things ironed out. It's also worth noting he's also putting shares aside for his family here. So he's just moving shares about, getting finances sorted, and it's really not a major concern in my opinion. Now, the other thing that caused the share price to drop was the resignation of their CFO, so Charles F. Cargill. So he resigned on the 15th of April, and he basically resigned with immediate effect. So they're paying him up to April the 30th, so it's a very, very quick decision. And on top of that, he's only just joined the company. So if I look at the announcement of him joining the company, it was August the 24th, 2020. So he really hasn't been there a very long time at all. So what can we do to mitigate this risk? Well, all we can really do is find out as much information as we can. In terms of what they've said in the report, they've said The resignation is not a result of any disagreement with the company or matter relating to the company's operations, policies or procedure. What we do tend to get with these things is you do tend to get ambulance chasing type law firms trying to short the stock, drive the price down and perform investigations of that sort. You can see here we've got the law offices of Frank R. Cruz, which I've seen them many times. They really do try to chase these stocks when they're falling. So that can be a risk, and if there's any sort of wrongdoing found, we really need to be careful of that. I wasn't necessarily happy with the statement, so I emailed Tattooed Chef. You can always do this with any company, but it's worth saying that sometimes they don't respond, and this was a really quick response. So Rachel from Tattooed Chef emailed me back. Chuck chose to resign. It was not based on any disagreement with the company. It has nothing to do with the company's financials, policies or procedure. Now, I specifically asked them, did it have anything to do with legal issues or fraud? That's a real risk. And no legal issues or fraud. So that's something that I really wanted to hear, which is really good news. So in terms of the replacement, they've also mentioned Stephanie Dykman. So she was the previous CFO. So she's taking that back with immediate effect, which is fine. She's obviously done the job before. She's very familiar with the company's financials as a current employee, so that's good. The other thing to mention is that Charles had 300,000 shares of the company issued. He gets to keep 10,000 of them, but the remaining 290,000 are forfeited with immediate effect. So that's 5 million back into the pot. I know it's not a massive amount, but that's good. Now, one of the really impressive things about Tattoo Chef is that they are profitable, which is really great when you're talking about these small, high growth companies. It's very difficult to achieve. So if we look at their revenue growth, I estimate it to be around 74%. Their own charts show it as 87% in the first 3 quarters, but it's absolutely massive. But if you look at the EBITDA as well, they are still maintaining that profitability, which if you're growing a company, they've increased their capacity by 100% in 2020. That's really, really impressive. Now, one of the key drivers of profitability is going to be switching out of the private label models. Now, private label model is basically where you produce on behalf of a Walmart or a Target for their own brand products. They operate on really razor thin margins. It's one of the reasons why vertical integration is so important in that model. But if you look at the performance over the past couple of years, in 2019, 22% of their total revenue was Tattooed Chef. That's moved to 57% in 2020. So they really are moving towards the profitable brand being their leading brand and driving the majority of their revenue. You can even see a slight decline in private label from 63.8 million to 62.9 million. Hopefully that continues, and if they can swap out the unprofitable product of private label for the profitable product of Tattooed Chef, that will really drive their bottom line significantly. Now, they do have some risks and opportunities in terms of bottom line and how they're going to increase their profitability. The first one is that they are starting to advertise, and this is really the first time Tattooed Chef has started to advertise. It's probably necessary to maintain the massive growth that they're experiencing, but it will drive significant cost. The second one, and what's really worrying, is they're saying that their product mix is driving a decline in profitability. Now, it's possible that if you have a company that's growing massively, one of the ways they're growing is through huge increases in the number of products they're producing. That increases the number of changeovers at the factories, or if you've got certain lines producing multiple products, it can dilute the profitability. So that is a little bit of a concern. In terms of opportunity, they do have the option of leveraging their fixed costs. So this is really key to any growth business. You set up assets, you set up production lines. Initially you might be using 20, 30, 40, 50% of it, but the more you use that asset, the more profit you get out of it, and that's really, really key to their operations. The second one is if you're growing, you're investing in new equipment. So you might invest in equipment that allows you to produce things 30% faster. You're therefore getting more out of your labor and out of your assets, which is really key there. In terms of forward projection of earnings, you can see very, very limited in the short term, so expecting 1 cent per share earnings, which isn't massive, but we really wanted them to be just staying profitable during this hyper growth period and reinvesting the money back into the company that they make to make sure they continue that growth over many years. You can then see in 2021 a slight uptick expected over the full year, 7 cents per share, so not massive at all, but still maintaining profitability will be key in the next couple of earnings reports. And then next year is where they really see a step up. 27 cents a share, which really represents a significant move on, and that's largely due to the growth of the Tattooed Chef brand. Right, let's get onto the risks and ops for this company. So I see the risks and ops as very much part of the same, whether they can achieve these 4 things that I'm about to mention or not. So the first one is product innovation, which I think they've got nailed and we'll come on to discuss. If they can expand their products, then they can certainly grow through that. And the second one is retailer expansion, which is the biggest risk in my opinion. They do have a small group of retailers that they're focused on at the moment. They need to expand that and open up. The third one is sector expansion. So at the moment they're very much in frozen foods and we need to see them broaden and move to other areas of the shelf or other routes to market. And the last one is international expansion, and whether they remain a US only company or they can expand globally. And these will really shake out over the next 24 to 48 months. And so really, if you're holding this long term, you want to see growth in each of these sectors to continue that 50% plus growth year on year that we want to see. Now, with that said, their speed of innovation really is impressive. So you can see from their reports, they've released 17 new SKUs during 2020. They have a library of over 150 new product concepts and recipes ready to develop. So they're already thinking way ahead in terms of what they're going to develop. And you can see 2021, they're going to move up to 62 SKUs from 38 in 2020. They've already done 11 of those to my count. So they're on their way. And that is really, really impressive in terms of growth. Now, one of the biggest risks for Tattooed Chef is their customer base. So historically, they've been mainly in Costco, Walmart, and Sam's Club. If we look at the amount of revenue that they accounted for, in 2020, our 3 largest customers accounted for approximately 88% of total revenue. Now, that is a huge risk. Falling out with any one of those customers could have real implications on the Tattooed Chef brand. It could either limit their growth or it could even get them back into decline if they were to fall out in particular with one of those customers. It is a low risk, but it's worth considering. But one of the things that I've been really happy with is that this slide, in the last 60 days, they've introduced Tattooed Chef to a number of major brands, Target being the one that everyone talks about, but Whole Foods is very significant, 7-Eleven is very significant. So they're really growing their customer base. I really want to see in their next few earnings reports that they continue to do this, they continue to roll out in many, many more customers, and that these customers take up a significant proportion of their total revenue as well. So as well as expanding to new customers, I actually think the biggest win for Tattooed Chef could be to expand in their existing customer base, particularly Walmart. Walmart are far bigger than any other retailer, and currently they only sell 2 Tattooed Chef products. They do also sell private label, but they only sell 2 Tattooed Chef products, and really when you compare them to a Target who are selling 8 products, there's a significant opportunity there. If Tattooed Chef could prove themselves to be a significant brand, get maybe a whole freezer door or half a freezer door in Walmart, they would see massive upside from that, massive growth potential. So that's the biggest opportunity, and they really need to utilize that existing relationship they have with Walmart to make that a reality. So one of the criticisms I've seen that have been levied at Tattooed Chef is that they're not doing any business to business. You can see their competitors Beyond Meat, they've got a deal with McDonald's, the Impossible Burger, they've got a deal with Burger King. And this is really an avenue that Tattooed Chef haven't explored yet. Now, it's not major because Tattooed Chef is such a young enterprise in terms of their branding. They're not focusing on burgers, which are obviously McDonald's and Burger King will be focused on at the moment. But I'm just going to play you a clip from their last investor presentation, which does show us that they are starting to think about moving into other sectors, which is really good news.
With our retail expansion well underway, our next sales channel focus will be food service. With COVID-19 restrictions expecting to mitigate, and students and employees return to campus and the workplace, we think the time is right to introduce Tattooed Chef to the business, industry, and education channel. With our existing entree and smoothie bowl portfolio, distribution network, and a new food service broker partner, we are excited about what the future holds for us in food service.
So the last opportunity for revenue growth that I really want Tattooed Chef to explore in the coming years is growth outside the US. You can see their presentations and their investor presentations all focus on US and being a national US brand. What I really want to see, particularly given that they've got the majority of their manufacturing capability at the moment based in Italy and a lot of their resources come from Italy, is that they really start to look at global growth and particularly in the European market. Now, it may just be that the US opportunity is so big at the moment that they just continue to focus there, and that could be a real strength. There is certainly room for them to grow in the US over many, many years, but there is a risk that if they don't open up in Europe soon, that a lot of the competitive space that they will want to be in will be filled up by existing competitors, the likes of the big FMCG companies that are already operating in that space. So there is a risk that they get boxed out of that market if they wait too long. Now, one of the things I see mentioned as an advantage of Tattooed Chef most often is their vertical integration. So they tend to own and grow their own produce, which is really significant. They obviously have the manufacturing element and they design their own products. So significant vertical integration, which can be an advantage, but what I don't hear as much of is how that can also be a disadvantage. So that's something that we need to consider. When you're buying from a market, you have a choice of products, you have a choice of options. If you're producing your own, you need to use your own product. What if you have a poor yield one year? What if you have pests? What if the price or a trend in a particular object goes down? So cauliflower they're using a lot. What if cauliflower becomes untrendy and people stop using it? You really do have some significant risk there. When you're purchasing from an open market, you can select ingredients. You might be able to select cheaper even if you're selecting from a specialized market, and you don't have the cost of upkeep of all of those assets and all of that produce. So I really don't see this as a major advantage, and particularly in times of strife. So we know they're growing in Italy and they have large coronavirus problems at the moment. It could really be a disadvantage for Tattooed Chef moving forward, and they may have to consider whether they want to split those businesses apart to be more efficient. So one of the last risks and opportunities that I wanted to mention is their advertising campaigns. So to continue to grow, Tattooed Chef are launching their first advertising campaign. All their growth to date has been completely organic. They've partnered with Nitro Marketing, and the one thing that this could do, it could really dilute their bottom line and really take out a lot of profit from their bottom line. But hopefully they can keep the growth up and use that growth to fund the advertising and keep that virtuous circle going. What I really like and what I think reduces the risk of this advertising spend that they're going to have going forward is that they're doing really targeted adverts. And they've mentioned, and they were really keen to stress on the call, particularly in response to some of the analysts, it's data-driven and geographically targeted, meaning that they can essentially target specific individuals. They're probably using online platforms to do so, and they won't be spending money on large campaigns that target a broad sweep. They can really lower the spend through doing that and achieve maximum results. So without further ado, let's take a look at the clip.
Tattooed Chef.
So that was the ad. I think it's a strong ad. It's got strong branding. The one thing that I didn't realise was the annoying buzzing noise that you can hear throughout is a tattoo gun. So, you know, still on brand, but if you're like me, you're not someone who's had a tattoo before or not into that sort of area, then it might be a bit confusing. You might just think, what the hell is that noise? But overall, I think it's strong branding and a pretty good ad. Finally, I'm going to mention an opportunity in terms of the stock price, not in terms of necessarily the fundamentals of the business. Now, I'm going to do a comparison with Beyond Meat now, but it's worth saying that I don't consider Beyond Meat a direct comparison to Tattooed Chef, but what they may be a competitor in is in terms of investors and where investors choose to put their money. If you're looking in the kind of vegan or plant-based space, then you don't have that many options in terms of stocks to invest in. So the first thing to note is that Tattooed Chef, a large proportion is owned by individual insiders, and what that does is it really protects us against very volatile price swings unless you start to see significant insider selling or buying. The other thing that we can compare is the number of analysts covering this stock. So Tattooed Chef only has 2 analysts covering this stock, and you can see one's a buy, one's a hold. So not the most bullish ratings ever, but solid. In terms of Beyond Meat in comparison, they've now got 19 analysts covering this stock, and it really is a much hotter stock at the moment in terms of Wall Street presence. You can see they've got a wide split of recommendations there, but certainly more interest on Wall Street, more knowledge. And one of the things that will happen as Tattooed Chef start to see more analysts come on board, maybe we get a couple of good results, we'll start to see institutional investing growing. And what that does is it will squeeze the space and the shares available. So the general public might own less of the stock, and that will drive the price up as more people want to own the stock. Now, one of the principles of investing is that if you can, you should always try the product itself. It's not worth knowing anything about the company unless you actually know what the product is. Unfortunately, being a UK citizen, I can't try Tattooed Chef products yet. I hope to in the future, but I can't yet. So the next best thing, I need to analyze the user reviews. So what I've done is I've gone to Target, one of their latest customers, but one with the biggest range of products. I've looked at the user reviews here, so you can see cauliflower mac and cheese bowl, 4.9 out of 5, so really good for this one, 54 reviews. But then what I've done is I've scrolled down to the similar items, and I've taken, for example, this Sweet Earth frozen cauliflower bowl here, and I've looked similarly at that product, seen what the rating is, 2.9 out of 5. So I've done a competitor analysis here. Now, when I've tabled all the results there, you can see firstly across their whole range of products, Tattooed Chef is performing really strongly in terms of user reviews. So the lowest user review score being 4.7 on the plant-based burrito, which is still a really, really strong score, and 4 perfect scores here for the veggie hemp bowl, acai bowl, enchilada bowl, and cauliflower pizza bowl. So really, really strong scoring. But more importantly, you can see versus their competitive set, if you're looking in the freezer, you're making a choice and you've tried one of these Tattooed Chef products, looking versus your competitors, you can see a couple here have some good scores. So Amy's a couple of 4.8s, Nestle have a 4.4 here, we've got a couple of middle 4s here, but you can see on the whole, Tattooed Chef is outperforming their competitors in a major way. What's more is for the acai bowl and the cauliflower pizza bowl, I couldn't find any competitors. So the similar products that were being recommended by Target weren't really similar products at all. And that, in my opinion, is a positive. That means they're looking at niches that they can fill, introducing new products, so we'll see how those perform as well. But certainly people really like them. But what I did want to highlight though is the health aspect of Tattooed Chef. So I'm going to be a bit pessimistic on this one and say, if you look at what they're targeting, they're reporting on pack 18 grams of protein, the vegetable content, the fact that it's vegetarian. It's worth noting actually some are vegetarian, some are vegan, some are gluten-free, so they're not just a vegan company, but they're really targeting a healthy image. But if you look at them versus their competitive set from a back of pack perspective, you can see here the cauliflower mac and cheese bowl contains 380 calories, so not bad for a main meal, but versus their competitive set, we'll see that's not great. Sodium, 30% of the daily intake, 700 milligrams, so that's salt intake, that's very high. But you can see they've got the 18 grams of protein there, which is a good amount of protein. and then vitamin D 1.1 micrograms, so 6%. So they do have some additional healthy benefits there. But when I look at some of their competitors, particularly on the calorific standpoint, let's look at this Sweet Earth alternative. 290 calories, so 90 calories lighter. You've got significantly less sodium, so 460 milligrams, 20% of your daily intake, so 1/3 lower. You've got half the protein, so that's a good thing for Tattooed Chef, and you don't have any vitamin D. But if you're one of the health food people that Tattooed Chef might be targeting and you're looking at calorific intake, you're probably going to pick this one up, not the Tattooed Chef one. Now, if I take a look at Lean Cuisine, they're slightly lower, again at 280 calories. They do have a higher percentage of sodium, so 800 milligrams in this one, so that's better for Tattooed Chef. But they do have the same amount of protein that Tattooed Chef are offering, although they don't have the vitamin D. So overall, you'd have to say mixed, but if you're certainly a calorific intake label reader, you're going to be picking one of these two over the Tattooed Chef product. So to summarize my position on Tattooed Chef, I love this stock. I think they have very limited risk with huge upside potential. And I can see in a number of areas where they can continue to grow at the rate they're growing at, or maybe even faster over the coming years, which will lead to a 2x, 4x, who knows, maybe even a 10x over the next 5 years or so. So I'm really excited to see what they can do. So that's all I've got time for today. I really hope you found the video enjoyable. If you did, please like and subscribe. It really helps me out. And I hope to do more videos like this in future. But for now, have a good day.